In part three, we'll go over construction and permanent financing. This is when you want to make sure that you have a lawyer on your team, a lawyer who has went through the same type of transaction that you're going through. So if you're going into bond financing, you want a lawyer that's done bond financing multiple times. And they also have preferably a team behind them who, if they need to go to for extra experience or questions, can also help out. With any set of lawyers, make sure that you're looking at their fees because this can be a driving cost of several $100,000 or more, depending upon the size of the deal. And if the deal doesn't close, you still owe that money. And when you are the transaction, you'll have attorneys, your lender will have attorneys, your taxpayer and investor have attorneys, and those costs can add up really, really quickly. Additionally, you may need a partner. For large size deals and even smaller deals, if you are inexperienced, you'll need one for the experience, and you potentially need one for the guarantees or for the financial backing and balance sheets that comes along with it. So before you apply for financing, make sure you have those things locked in because they will prove priceless along the road. So when you're looking for a construction lender, you may have to have a construction lender and also a permanent financing. So the construction lender will get you through what it says, the construction portion, and then the permanent financing will be a longer term that may be 5 years, 10 years, 15, up to I've seen 50 years in financing. Ideally, you'll want a construction lender that'll then roll into permanent financing. It'll save you just on time, legal costs on financing both transactions, but that's not always possible. But if you can, try to find one that's a seamless process. Other things, you always want to look at the interest rate that you're getting, your fees that are along the transaction, and then any amortization on how long you have to pay the loan back. Sometimes the shorter term loans can seem attractive, but if the market is in a downside like we are now, when people were making loans at 3% and now the loan is coming due at 7%, then it can cause your project to quickly turn upside down, and not to any mistake of yours as a developer or as an owner, but simply because the economics of the national economy at the time. So make sure to look over all of these. Personally, I like to get the longest loans possible just to be able to be on the safer than sorry side. But it will vary per transaction, but make sure you read through all the documents. So if you're looking at HUD 221 D4 loans, they are designed to provide both construction and permanent financing. If you qualify, it's a great, great program. You have some innovative developers such as Ariam Cassette who are using these to make deals right now, but they are time consuming. The paperwork is heavy, and you have to provide a lot of resources upfront to get the approval and to go through the process. So looking at all the different programs, whether that's Freddie Mac, Forward Commitment, you have a lot of different ones that can be utilized, but they all have their positives and they all have their negatives. There also are some private banks such as Cedar Rapids Bank and Trust, who we've used in the past, that offer similar products with the lower rates and longer amortizations at a HUD 221D4, but without the longer time frame that it takes to close. So it always pays to shop around, do your due diligence, get a couple different quotes. And this is not only for loans, but anything that you're doing, and compare to see which is going to be the better uh, play for your transaction. A new one that we're looking at are these bond deals, both taxable and tax exempt. It's in different lane of financing, different than even the tax credit world. And it's could be, and we will do a whole different session on it once we're done. But I just want to let you know that look into all different ways to finance these deals because sometimes it's just what's less uncovered that could be most beneficial. And once we get through our bond transaction, the taxes in one that we're working on now, we'll do a whole session just on bonds. If you have any specific questions, again, please DM, leave a comment, and we'll get back to you with more information on that. Now, when you're applying, you're gonna need your performer or your projections, what the deal looks like and what do you project it to be. They're also gonna take this and put it into their model, the bank is. And so make sure that your numbers are tight and they'll come back with questions. So make sure you understand your performance, even if it's not 100% correct, because we're not perfect. At least if you can explain your thought process or explain why you got those numbers or how you got to those numbers is extremely helpful. You're gonna need your personal financial statement, a balance sheet, your real estate own schedule, and then like a deal memo or narrative. And this is just to get you going. So once that information is given, the lender will run at least to like a preliminary underwriting to go to and say if it's something that they would like to look at, would like to move forward. And if you know anyone who's on that committee, who's on that board, make sure to take them out for tea or take them out for lunch and talk them through the project. Again, relationships, as always, they really do matter here. So make sure that if you do have any connection or any relationships there, you're not asking them to make an unfair decision, but you're just giving them more background about your deal and who you are. And then if the loan makes it through this initial approval, they're going to send you a closing checklist. And this can be anywhere from 30 to hundreds of items that they're going to request of you, also with a commitment fee. So again, uh, the fees can kill you. And so you want to make sure that this is something that you want to move forward with. And so the fees will cover third-party services like legal, appraisal surveys, and other costs that are attached to the closing. Again, they're not small, so make sure that you want to move forward with the project and you have all of your other items lined up before uh, moving forward with paying the commitment fee. And once you complete the closing checklist, again, do that project process, you usually have closing uh, calls weekly so that everybody's on the same page moving towards closing. And then you're ready to close the deal and start on construction. And so it's, of course, a longer process than what was described in this session, but at least it gives you some parameters to what to look for. And I welcome more questions to follow up on this because, again, we have some very, very unique experience with low housing tax credits and those financing, also going through CDFIs, utilizing banks, investors, et cetera, to get deals financed. So thank you again for joining session 5 of Real Estate 2050. I'm el-amin, and I hope to see you on session 6. Thank you.